Okay, hello everyone. Just before we get going, can I just check that the audio is coming through clearly? So if you could just let me know in the chat function that you can hear me clearly, and then we'll get going. Brilliant, thanks a lot. Great, cheers. Okay, let me just hit record. Okay, hello everyone, I'm James Harte and welcome to this special Orbex market analysis session where we are of course going to be talking about Brexit. So, with the March 29th deadline now fast approaching and the landscape as confusing as it could possibly be, I thought it would be a good idea to take some time to clarify where we are in terms of the Brexit negotiations, summarize some of the key events that we've seen recently, and talk about what we can expect next, looking at some different scenarios for potential outcomes, and also looking on the charts at some key levels and key structures that we can monitor as we progress now towards that Brexit deadline. Now, it is worth noting that the Brexit landscape at the moment is very fluid. For those of you who have been keeping abreast of the headlines, I mean, I suppose as the saying goes, unless you've been living under a rock, you will have, of course, been hearing all of these headlines coming through. And we're seeing a lot of conflicting reports and headlines. So this is a very sensitive and highly changeable situation. And for those of you who are interested in political matters, I'm sure this has been a very interesting situation to watch. And of course, for the markets, it's been incredibly important. So that's what we're going to do then in today's session. And as ever, if you have any questions during the presentation, please just write them in the chat function, and I'll stop periodically as we go along. And we'll also leave some time at the end. We'll also leave some time at the end with some questions then. Okay, so we'll jump straight in then, and let's take a look at a quick Brexit timeline to just sort of summarize some of the key events that we've seen recently in the Brexit negotiations process, and summarize where we're up to with that and what we can look at next. So, the Prime Minister Theresa May was due to hold the first meaningful vote in UK Parliament actually ahead of Christmas 2018. So this vote was essentially to gain parliamentary backing for her proposed Brexit plan. However, feeling at the time that there wasn't enough support, May actually postponed the vote. Now, following the postponed vote, it was then announced that members of the Prime Minister's own party had tabled a vote of no confidence against the Prime Minister. And this actually resulted in a secret ballot being held on December 12th, which surprisingly for many, I guess, Theresa May actually went on to win. She won the secret ballot by 200 votes to 117 votes and pressed ahead with her Brexit campaign. So May actually went on to hold the first meaningful vote after UK Parliament returned from the Christmas break. The vote was held on January 15th in Parliament. However, the plan was voted down, and it was actually an historic defeat for the government, which saw Theresa May's Brexit plan being defeated by 432 votes to 202 votes. So this was a significant loss for the government. Following the loss then in the House of Commons, Theresa May used a point of order to outline how the government intended to proceed in the wake of that defeat. Interestingly then, immediately following the loss, Jeremy Corbyn, who is the leader of the opposition party, the UK Labour Party, tabled a vote of no confidence himself, which was to be voted on following a debate the next day. So not only did May come under fire from members of her own party before Christmas, suffering a vote of no confidence, but then just after Christmas, when she eventually lost the first meaningful vote, she then came back under fire with another vote of no confidence. Again, however, May came out victorious. She was able to hold on to her leadership and once again pressed ahead with her Brexit campaign. So on January 21st then, May returned to Parliament. This time she returned to Parliament with the UK House of Commons to vote on amendments to be made to her Brexit bill in order to secure parliamentary approval. So this was for members of Parliament to choose specific amendments that Theresa May could then pursue in order to return this amended bill to Parliament in order to get backing. So, out of a list of different options they could vote on, Parliament voted in favour of pursuing 2 amendments. The first was seeking changes to the Irish backstop issue, which has been the biggest sticking point for negotiations, and the second declaring that a no-deal Brexit cannot be an option. So, following this vote, which saw these 2 amendments backed by Parliament, May then set about another feverish round of negotiations with EU leaders aimed at achieving the alterations requested by Parliament. However, negotiations were particularly fraught, and there were many headlines at the time highlighting the EU's reluctance to amend the Brexit bill, which was agreed between the UK and EU leaders. So, in the end, May was unable to secure any solid amendments, the so-called legally binding changes which Parliament had been looking for, and was only able to establish assurances from the EU regarding the temporary nature of the Irish backstop, as well as regarding the nature of customs checkpoints on the Northern Irish border. So, May then returned to Parliament on March 12th after this round of negotiations with the EU, during which time she was supposed to have secured these amendments. So, she returned to March 12th, presented a Brexit bill to Parliament once again in light of the further negotiations she'd undertaken with the EU. However, once more, despite her work, the bill was defeated, although this time she did actually lose by a small majority of 391 to 242 votes, but nonetheless, she did fail once again. So following the vote then on March 12th, May used a point of order to outline the next steps, where she confirmed that Parliament would be given the option to vote on whether to press ahead with a no-deal Brexit or to seek an extension in the Article 50 process. Okay, so following a debate then the next day on March 13th, Parliament voted in favour of rejecting a no-deal Brexit by a majority of 321 to 278 votes. Again, May addressed the House following the vote, acknowledging Parliament's opposition to a no-deal and confirming that Parliament would now be offered a vote on whether to pursue an extension to the current March 29th deadline. So the next day then, on March 14th, Parliament voted in favour of requesting an extension to Article 50 by a majority of 413 votes to 202. Now, following that vote, it was reported that May was considering holding a third parliamentary vote. However, the Speaker of the House of Commons, John Bercow, this week announced that in accordance with a convention from the 1600s, a third parliamentary vote would be blocked unless it was substantially different. So the Speaker's argument was that if Theresa May returned to the House of Commons at this point, asking them to vote on the Brexit bill as it currently is, it would simply be asking Parliament to vote again on a relatively unchanged bill. So in order for the bill to go back before Parliament, it either has to be changed substantially to the point that it passes a certain set of criteria defined by the Speaker of the House of Commons in accordance with this citation from the 1600s, or Theresa May would have to ask the Queen to prorogue Parliament, which simply means formally ending the current parliamentary session with a view to it then opening again, usually a couple of days later, during which time in the new session she could present a new Brexit bill. So that's the current situation then, and at the moment what we're looking at is that May has asked EU leaders to discuss an extension to Article 50 at a special summit that's being held tomorrow. Okay, so in line with MPs voting last week in favour of seeking an extension to the current Brexit process, May has written a letter requesting a 3-month extension at the moment. And the EU leaders will discuss it during a summit tomorrow. Now, there's been a lot of discourse around the projected length of this Article 50 extension at the moment, because many people feel that such a short extension of only 3 months will do very little to support sterling, as it will simply delay a potential no-deal scenario. So If you think about how little has been achieved in relative terms in the 2 years of Brexit negotiations that we've seen so far, the reaction is one of disappointment, because many feel that a 3 months extension doesn't really allow enough time for any proper negotiation to occur and for any real resolutions to be established. And simply all it does is kick the can down the road, so to speak, moving the potential no deal Brexit cliff edge slightly further down the road. Now, the situation is highly complex because there are a few different factors to this. At the moment, the UK Parliament has asked the Prime Minister to pursue an extension to Brexit, asking the EU to extend the Article 50 process, meaning that the UK wouldn't leave the EU on March 29th, as is currently planned. However, it is not yet clear whether the EU will in fact agree to such an extension, okay? Because remember that the EU could simply block this, they don't have to go ahead with it. And in fact, a lot of the immediate response that we've seen around the suggestion of an extension to Article 50 hasn't been too encouraging. We saw reports yesterday that leaders from Germany and France have been highly vocal in their criticism of Brexit along its campaign, have now suggested that unless Theresa May can present a very clear and precise reason why she needs such an extension, that they will simply block the request. And these reports, highlight the great deal of uncertainty and risk which is still present regarding the outcome of Brexit. We've also seen the President of the European Commission, Jean-Claude Juncker, also incredibly vocal in his opposition to extending the Article 50 process. Speaking on German radio this week, Juncker told reporters that given the confusion around the current state of UK politics, he feels that EU leaders are unlikely to agree an extension at this week's summit and will more than likely need to meet again next week to hold another Brexit summit to allow time to see if May can gain any backing from her own parliament. So speaking with reporters, Juncker said, Theresa May has neither in her cabinet nor in her parliament agreement on anything. As long as we don't know what Britain could say yes to, we can't make a decision. So my assessment is that we won't be able to reach a decision this week and we'll have to meet again next week. So the situation is very unclear at the moment. As I say, EU leaders are meeting tomorrow at a summit to discuss Theresa May's request for an extension. But again, all of the initial reports at the moment suggest that the EU aren't particularly appetized by the idea of offering an extension to the current Brexit process. We've seen Donald Tusk saying that he feels EU leaders could potentially agree to a 3-month Article 50 extension, but only if Theresa May is able to go back to Parliament and gain approval for her Brexit bill. So there are a few moving parts here, which again present a lot of risk in the short term. If EU leaders can't agree to extending Brexit, then it is not clear what will happen, because UK Parliament voted against a no-deal Brexit option. But if an extension isn't granted and the UK is due to leave the EU on March 29th, then either May will have to go back to Parliament and agree a last-minute Brexit deal somehow, or she'll have to revoke Article 50 and cancel Brexit, or press ahead with a no-deal Brexit that Parliament has voted against. So the options at this moment in time are looking very uncertain. As I say, the situation is very fluid and and highly changeable. And we're seeing a lot of reports coming out, a lot of comments from various different government officials and EU leaders. So this really is a highly sensitive and highly changeable situation at the moment. I mean, I would say that at this stage, it appears that the most likely outcome is that the EU will grant Theresa May an extension to the Article 50 process. Although countries such as France and Germany have been intent on, publicising how highly critical they are of the Brexit campaign. Both these leaders, Merkel and Macron, have been incredibly vocal in their criticism of the Brexit process. At their core, they still would rather that the UK remain in the EU. And certainly, if the UK is to leave the EU, they will not want to willingly invite the potential chaos of a no-deal Brexit. Furthermore, an agreement to extend the Article 50 process means that the UK and the EU will simply have some more time to work together to reach a deal that works best for both sides, while at the same time continuing the UK's status within the EU at the moment. I suppose if we wanted to dive into the situation a little bit more and do some extrapolating, we could think that, you know, EU leaders, aware of how divided the UK political landscape is currently, might also sense that if an extension to Article 50 is granted, this could open up the possibility of the UK government eventually holding a second referendum, which could see Brexit cancelled. Okay, because although Theresa May has been ardent in her she's, you know, we've seen her sticking to her guns in admitting that, you know, she's not going to be holding a second referendum regarding Brexit. We have seen a second referendum mentioned one or two more times recently in UK Parliament. And so you could think that if we enter into a situation where the Article 50 deadline of March 29th is extended and the UK government has more time on its hands for more Brexit deliberation, then political pressure and potentially public pressure could also lead to a situation where we do end up having a second referendum, which would likely see the UK electorate voting in favour of remaining in the EU at this point. So there's lots of moving parts to this current situation. But as I say, in the immediate situation, what we're waiting for is news on tomorrow's EU summit regarding the potential for an Article 50 extension. So we could either see the EU immediately slamming the option of an extension, saying that they won't agree to an extension, and Article 50 has to expire on the March 29th deadline as currently projected, or we could see them agreeing to a short extension, or what we're more likely to see is them pushing it to the last minute and saying that they're likely to agree an extension at a further summit to be held next week if Theresa May can go back to Parliament and get backing for her bill. So these are the situations that we're currently grappling with, and as I say, very changeable, highly dynamic, so it's worth keeping an eye on the news wires and staying abreast of what we're writing on the blog each day to keep you up to speed. But with that in mind, let's take a look now at some charts to sketch out some potential scenarios that we could see around this whole Article 50 extension process. So we'll look first of all then at the sterling dollar. So you can see sterling dollar then, we're in a very interesting situation at the moment. So following the lows that we printed in sort of late 2018, early 2019, you can see that we've been grinding higher. I'm actually here on the weekly time frame at the moment, just checking out the higher time frame chart. So we've been grinding consistently higher then from those early 2019 lows, and we posted a fairly consistent recovery so far. Just recently, you can see we had this large bullish engulfing candle keeping the rally alive, although it's notable at this point that momentum has waned, and you can see that although we've continued to post fresh highs on each upward leg of this move, the rally has started to become a bit more laboured, and we have started to see a bit more retracement. So we're clearly seeing a loss of momentum in sterling dollar at the moment. Now, the situation we're currently in is that price is challenging this 132.99, we'll call that the 133 area. Let me just go ahead. So we're challenging the 133 level at the moment, and you can see that this is actually the neckline to this large inverse head and shoulders pattern that we're currently tracking out. So the current technical landscape actually suggests that price is poised for a large move to the top side. So this is interesting then, because considering what we're talking about, all of the headlines around Brexit at the moment are quite negative. However, of course, if the EU does agree to extending Article 50, then what this actually means for investors is that a lot of that uncertainty, in the short term at least, will be alleviated, because it means that the UK will retain its legal and financial status within the EU, specifically retaining access to the single customs union, to the single market, meaning that we're likely to see investor capital outflow stop in the short term as that uncertainty subsides. So if we do see the EU granting an extension to Article 50, then we could quite quickly see sterling breaking out above that 133 level. And if we zoom in here, we can see The next level we'll be looking at would be this mid 134, so 134.65, where we had some previous highs and lows lining up, offering structural resistance. And then above there, the next level we'd be looking at would be this 136.50s to 137 zone. So you can see again, we've got some previous structure highs and structure lows here. So we've got a really good structural level, but then also interestingly, we've got this long-term bearish trend line from 2014 highs. So this is a particularly interesting level to watch in sterling, and really a test of this level is going to be pivotal for determining whether or not we see cable resuming the long-term bearish trend that we've been in now for 5 years, or whether we're going to see a regime shift in cable which breaks out above this bearish trend line, above this structural resistance, and starts to make a broader reversal higher. Now, I would think that we're only likely to see such a break higher. For example, if we see the UK and the EU agreeing to an extension. I mean, there is still an option where the EU could come back to the UK and saying that they will agree an extension, but they won't agree such a short extension. They'll offer them a longer extension, whereby the UK would have to remain in the EU longer, for 6 months up to a year. Now, although the tabloid headlines around such a situation would be negative, the actual market impact would likely be positive for GBP, because again, what this would actually do is alleviate a lot of investor uncertainty and stem capital outflow. So if we do see the EU granting the UK an extension, then again, we are likely to see this break higher. And depending on how long the extension that the EU agrees to is, will determine whether or not other factors come into play. For example, if we see a Article 50 extension of 6 months or up to a year, then we're likely to see the focus shift back more to UK fundamentals, and the BOE, the Bank of England, will then come back into the spotlight once more. So we've heard the Bank of England then over the last year have been incredibly vocal about their desire to continue lifting rates in line with their view that the UK economy is recovering well. The only roadblock, however, has been the uncertainty around Brexit. And the bank has been very clear that in the event of a no-deal Brexit and the projected severe negative economic shock, they could actually be forced to cut rates. However, it has not yet commented on what its course of action might be in the case of Article 50 being postponed. So it's definitely worth tuning into the Bank of England's monetary policy meeting tomorrow and staying abreast of the assessment there, because I wouldn't be surprised if at this stage we hear the bank commenting on the potential outlook regarding this new situation. Because at the time that the bank gave its last monetary policy assessment, there was no talk of extending Article 50. This has only just come up in the last couple of weeks. So it'll be very interesting to see if the Bank of England comments on that and what it does say. But again, if we do see Article 50 being extended, depending on how long it's extended for, this could allow enough time and enough stability for the Bank of England to go ahead and raise rates again, potentially as early as May, in which case we could see a break of this bearish trend line from 2014, and we might very quickly be looking at the 2000 and sort of, let's just double check there, so the 2018 highs around 143.50. So this is definitely a chart that I'll be keeping an eye on then, and particularly, you know, in regards to the news that we get from the EU tomorrow and the news that we get from the Bank of England tomorrow. Now, another chart I'm keeping an eye on is the UK 100, the FTSE 100. This is the UK's main equity index, and you can see that we've seen a strong rally in the FTSE over the last 2 weeks specifically. As we've seen a lot of talk about Article 50 being postponed, again, you know, the alleviation to investor uncertainty this has caused. This has allowed a rally in risk assets and UK risk assets, which has seen the FTSE breaking up above the 72.64 level, which was the prior 2019 high. So while price remains above this level, the next move to focus on will be a run up to test the bearish trendline resistance from 2018 highs ahead of the next big structural level around 74.96 to 75.44. Now again, if we see a break above these levels, this will start to spell the this will spell the start of a major shift in direction for the FTSE. But it is worth noting, however, that we do have the completion of a large ABCD symmetry pattern here. So you can see if we map this leg, which was the last leg, the 2018 rally, to this current move, you can see that it completes into roughly the top of that 75.44 resistance zone. So we have a lot of technical confluence in this area with that those structural levels and the symmetry completion. So this could be an area where we see the reversal capped, and I'll be monitoring price action as we test that area for any signs of a potential reversal lower. But in the short term, it seems that focus is on further upside here. And again, it's important to monitor price as we test the bearish trend line and that structural resistance zone to see if we get any bearish price action. But other than that, we could see price continue to take off, and bulls will be looking to use any retest of this 72.64 area as a platform to re-establish longs. Now, another chart is, of course, the Euro Sterling chart. And again, looking at the Euro Sterling chart on the higher time frames than on the weekly, you can see it's interesting because it really backs up the picture that we're currently looking at in sterling dollar, because we have the exact same setup, but this time just we have the inverse. So remember on that cable chart, we were looking at an inverse head and shoulders here, looking to get long. And then on the Euro Sterling chart, you can see we've actually got this head and shoulders pattern here. So the left shoulder, the head, the right shoulder, and we're currently trading down to test the neckline here along this rising trend line. So again, if we do see the EU granting the UK an Article 50 extension, and again, the severity or the scale of the move depends on how long the extension is, but on its basis, if we do see the EU granting the UK an extension to the Article 50 process and sterling starts to rally, then we could see a break of this neckline, and then what that would open up is the way for a run down to retest that last broken high point, which was actually the last test of the bearish trend line from 2008 highs at 0.8110. Okay, so you can see this was the last high that was made in the bearish trend line before price broke out. And interestingly, since we broke out above that bearish trend line, you can see that price hasn't returned down to retest it. So if we think about on a much bigger scale, what we're looking at on this chart could potentially be this. We've had this first initial explosive break of the trend line. So that's the first move with all the volatility and momentum. We then stalled out at this level here. We formed the block of consolidation over the last few years. And now what we could be seeing is the retrace, the corrective move with price trading back down. And then what we could be looking at is a retest of that broken bearish trend line before we see a resumption of this initial bullish move. So this is obviously a much longer term picture, but a lot of my own trading is based on the higher time frame swing trading. So I'm always trying to stay abreast of what is happening on the weekly charts and then looking to scale down to the daily charts for entries. So it is always worth keeping an eye on this and getting a broader idea of what the market might be up to and the general direction we might be seeing, because then that gives us a medium term view, which is bearish until we retest the broken trend line, then a longer term view of a resumption of this bullish move. So there's some very interesting levels in Euro Sterling, and as I say, the fact that that broken bearish trend line hasn't been retested yet certainly does present some opportunities there, some interesting opportunities to stay abreast of. Okay, and then the final chart that I'd like to take a look at is the sterling yen. Now, this is interesting because you can see that the sterling yen has started selling off now in response to news that Theresa May is asking for this extension of 3 months. And the initial response we've heard from EU leaders is that they could potentially agree to an extension, but only if Theresa May goes back to Parliament and gets parliamentary approval for her deal, which, as we outlined at the start of this session, isn't a clear-cut operation. And so that does present the risk that we could see the EU unable to grant the UK an extension to Article 50. Now, one chart that will clearly reflect the dynamic landscape of the Brexit negotiations is the sterling yen, because of course sterling is directly impacted by any of this UK news, and then the Japanese yen is affected because of its safe haven status. So in times of economic uncertainty, we often see Japanese yen outperforming due to safe haven inflows. Similarly, during times of strong risk appetite, Japanese yen tends to be a bit weaker because that safe haven inflow is nowhere to be seen. So at the moment, this current chart with the sterling selling off against the Japanese yen suggests this element of risk that traders are aware of, because they're choosing to hedge their bets instead of backing sterling here, they're backing the Japanese yen. So this suggests that traders are very aware of the risk that's being presented over the next few days, with the EU summit that's coming tomorrow and the potential for another EU summit to be held next week. Now, this is a particularly nice chart at the moment because, as you can see, I've mapped out some very well-defined support and resistance areas. So prices recently traded up to this 148.80 to 149.70 zone, where we've had a few prior major swing highs, you can see. So we've got a very clear structural resistance level here. The price has traded up, tested that level, and for now that level has held, and we've seen price trading down. So as we trade back down now towards the next clear support level of 144.83 to 143.74, this is going to be a particularly important level to watch, because this will ultimately decide the short-term direction of sterling yen. So if in tomorrow's summit we see the EU granting the UK an extension, then we're likely to see sterling quickly reverse higher and trade back up to these levels and potentially even break above. In the short term, if we see the EU saying that the UK Prime Minister has to get parliamentary backing for a deal before they can offer an extension, then we're very likely to see sterling trade down and test this support level, which might hold potentially. However, if we see the EU blocking an extension and telling the UK that an extension is off the table and that they have to press ahead with the current March 29th deadline, then we're very likely to see this level break and sterling is going to test the 140.80 to 140 area, where again then we'll be presented with this inverse head and shoulders. You can see we've got the left shoulder here, the head, and then this would be the right shoulder. So we'll be looking for a reversal higher at some point and a trade back up to the neckline. So in the short term, that's what we're looking at with sterling yen. We've got this interim double top in place. If price can sustain a retest of this support level, then that will maintain the bullish structure of this current trend formation and keep focus on a further upside run. But if that level goes, we're going to be looking at a trade down to this level next. So again, as I say, sterling yen, a very nice pair to keep an eye on during the course of these Brexit negotiations, because of the special relationship that both currencies have, sterling being directly impacted by UK political news, and the Japanese yen reacting to the safe haven inflows and outflows around the nature of this situation. So ahead of the summit tomorrow then, let's quickly take a look at where the retail market is positioned. And one tool that I like to use for this is the community outlook on MyFXbook. And essentially all this is an aggregated feed from a range of brokers, which shows how retail traders are positioned. So at the moment, you can see retail traders are positioned 57% short in sterling and 43% long. Okay, so the majority of retail traders are short sterling at the moment, expecting it to go down. Now, the key thing to note with this is that for the most part, the retail market, unfortunately, tends to be on the wrong side of the trend. And this is especially true where the readings are at extreme levels. So this can be very interesting to watch once this reading starts to move to outer extremes around the 75 to 80%. So again, at the moment, then you can see that we're only 57% short. So there's plenty of room for this to go. Now, I just zoom out here and I can walk you through this. Oh, one second. Okay, there we go. Okay, so look then, so this is interesting, right? You can see that we had this rally here in cable from mid-February up to March. Now, during the course of this rally, as price was moving higher, you can see that traders, retail traders, were actually building their short positions. So as price was trading higher, instead of looking to get long, retail traders were actually busy betting that price was going to go down, and they continued to do this. They continued to do this all the way up until around this point here, where again you can see retail traders started to reduce their short positions at the same time that price was finally selling off. Okay, and then once again here, price has started to rally higher. We're trading higher. Retail traders are building their short positions. So essentially what you can see is that retail traders tend to be wrong because they're on the wrong side of the trend, basically, because they either miss the move and get in late, or they get in early and get out before the move happens. But either way, the timing with retail traders tends to be off. So tracking this tool can be a very useful way of gaining insight into the direction, the likely direction of price in the short term at least. Okay, so as I say, you can see here, while price was selling off here, retail traders were building their long positions. Price then flips and starts to trade higher. Retail traders start building their short positions. Price tops out, sells off. As it does so, retail traders cut their short positions. And then as price starts rallying again, retail traders start building their short positions. So at the moment, the retail market prefers to be short cable, which suggests that there is room to go to the top side. Now again, if you think about why the retail market might be looking at selling cable, a lot of it is to do with the negative tabloid press around the current Brexit situation, the division in UK politics, the uncertainty around Brexit. Theresa May is going back on her promises. She's going to extend Article 50. This isn't what the UK public voted for. However, the actual market impact of an extension to Article 50 would be very different, because as we discussed earlier, the picture for investors is the longer that the UK remains in the single customs union, the longer that investors don't have to worry about whether to take their money out, or what's going to happen to their market access, or what's going to happen to specific companies. Okay, so if the UK remains in the EU for a longer period of time, this should translate into better trading for sterling and for UK assets. So at the moment, the current situation is that retail traders prefer to be short cable. Now, if we do see an extension to the Article 50 process, we could very quickly start to see cable breaking higher, breaking above these current mid 133 highs. And if we do see that, what we're likely to see is this reading popping higher, the red chart getting higher again, and we're likely to see this short reading increasing up into 70 or 80%, which keeps the prospect of further sterling upside very much alive. So this is a very interesting gauge to watch during the course of these Brexit negotiations, just to get an understanding for where the retail market is positioned. And it's very interesting, especially around these highly sensitive political debates, to look at the disparity between the tabloid reporting of specific events and situations and the actual market impact. Okay, so I hope that you found this session useful. As I say, we've outlined some very interesting scenarios that are potentially ahead of us with this Brexit situation. I mean, as I've reiterated during the course of this, it is worth noting just how dynamic and changeable and incredibly fluid this landscape is. And we've got a lot of reporting going on. Official comments out from UK ministers, comments out from EU leaders, and then a few hours later, we've got contrasting comments. We've got reports that Theresa May is considering this, and then we've actually got the opposite happening. So it is a very neurotic situation to be trading at the moment, and I think that's very much reflected in the price action, which has been very whipsaw over the past couple of days. But hopefully now, on the back of this EU summit tomorrow and the Bank of England meeting, we'll start to get a little bit more clarity. We do have to be prepared for the fact that the EU is very likely to punish the UK and push it down to the wire and say, look, we can't grant an extension this week, but we could grant one next week at another summit if you're able to gain parliamentary backing, which then puts the ball back in Theresa May's court, which then obviously returns all of the focus to the divisions within UK Parliament, especially in light of the Speaker of the House of Commons blocking a third Brexit vote. So again, unless Theresa May asks the Queen to formally end this parliamentary session, or is able to present a substantially different Brexit bill, then it doesn't look like that third vote could happen. So this is a very sticky situation for the Prime Minister, and there's going to be some explosive moves in the back of this, one way or another, because we are only 9 days away now from that Brexit deadline. So just before I wrap this up, then are there any questions I can answer for anyone? Great. Okay. Well, look, I'm glad that you all found that useful, and thanks a lot for following along. And as I say, what I'll do is I'll update you on the blog, so make sure that you stay following the blog, and we're covering this situation as it develops each day. And yeah, I look forward to updating you on the back of tomorrow's summit and seeing where we're up to. Okay. Thanks, everyone. Take it easy now. Thank you.